Hello, and welcome to the SHS podcast, where we provide value and content to business owners and entrepreneurs. Today, we're joined by Scott Rodgville from Gorfine, Schiller and Garden. How are you?
I'm great, Steve. Thanks for having me.
I appreciate it. Thank you for taking the time. Listen, before we get into the meat of everything, I'd love to learn more about you, who you are, where you come from, and how long you've been a CPA.
Well, sure, Steve. Happy to share. As you said, my name is Scott Rodgville. I'm a director at Gorfine, Schiller Garden. I've been here for about 18 years now. I've been a CPA for about 25 years, and I've been very fortunate to find this as sort of a second career, but I've thoroughly enjoyed it. And while I'm not originally a Marylander, I'm down in the area for about 35 years now, and it's truly home. I'm married to local, so I have my appropriate paperwork there, and I'm happy to raise kids in this area and continue to be a part of the Central Maryland community.
Awesome. Well, your office is in Owings Mills, correct?
That is correct.
Awesome. But you basically service the entire Metro DC area, and you have national and international clients as well.
That's correct, Steve. Most of our work is sort of in the Central Maryland down through Northern Virginia slice, but our clients are in wherever they need to be. Certainly, most of them are in the Northeast or the Eastern corridor of the U.S., but we do service clients wherever they need us, wherever we can help.
Well, we're real lucky in this area too. I mean, being near the DC government, really being by the heart of everything, really gives us a stronger economy, a more robust economy, and a lot of government contractors as well. And I know that that's one of the areas that you and your firm specialize in. So love to jump into the meat of this and talk about your knowledge and your experience with GovCons and information you can share with our listeners.
Sounds good. And you're absolutely right. I think not only does it make our economy more robust, but I think it stabilizes it as much as anything else. Those government contractors play an important role in the economy, in not only directly in who they serve, but just as significantly the rest of the economy that they hold up by employment and hospitality and restaurants and et cetera.
So, one of the things that obviously makes GovCons more intensive in terms of an accounting, right, and a tax perspective, is really the requirements that come along and come behind it, right? So can you share a little bit about, your experience with the FAR DCAA compliance and general accounting that's involved with that?
Absolutely, Steve. So as you're aware, and I'm sure that some of your podcast listeners are also aware, compliance is at the top of almost every government inspector general in the world. It's where he starts. And so what we think of as our role is to educate clients and the general public in order to make sure that what they're doing is in their best interest, both economically but also from a legal perspective. We sometimes feel as though we're policing a little bit on behalf of the government, but we know at the end of the day that if we can get the message across correctly, that we're going to keep our clients from having to do more paperwork down the road or make adjustments to what they're doing. So we spend a lot of time getting familiar with and studying the federal acquisition regulations, the FAR rules, and being able to assist them with indirect cost proposals that may be subject to DCAA auditing, and just generally trying to educate. We think that the value in the service that we provide is in the education, and we do that both with contractors working with the federal government as well as state contractors in a number of different states.
And states as well as federal, I mean, they have their own requirements as well. It's just not on top of, on top of, or it could be, or separate then, right?
That's absolutely correct. And not only does each state have their own rules, but you'll see that what seem to be similar rules are interpreted significantly differently. And the biggest of those revolves around compensation. When we talk to many of our state contractors, what we find is that depending on the jurisdiction in which they're operating will really determine what are the income limits that owners or principals in an organization can allocate as a direct cost or as an overhead cost in preparing their overhead rate. And so you have to know sort of the Bible of information that's out there in order to determine what the right rates are. Federal enforcement will tend to use different compensation rules than some of the states will allow, and usually the states are at lower numbers.
And then I guess the way that compensation is paid as well, and what's allowed and not allowed.
That's absolutely correct. When you start looking at compensation, you look at some of the unallowable things, potentially like public relations. So as you're, marketing for a company is important, but the government doesn't want to pay you to market for that company. And of course, it becomes important to maintain adequate and appropriate time records in order to be able to withstand scrutiny if put into question. In addition, bonuses are a hot point for both state and federal regulators. It's important that they be documented properly and based upon merit. And then, of course, whenever you've got owners of closely held businesses, they're going to be looking at whether you're getting dividends in lieu of bonuses, and they're going to be looking at all sorts of ways in which you might otherwise get compensation out of a business that you're certainly entitled to from a tax perspective, but that doesn't necessarily mean it's going to fly with government oversight.
So let's back up once, because you gave a lot of information, a lot of valuable information here. Let's, if we can, skip back down to unallawables, right? Sure. What are other types of unallowable expenses that you can and can't record?
Sure. So some common examples of unallowable costs are anything that's public relations, as I started with or alluded to with the payroll side, but then also you'll get things like bad debts, charitable donations, interest expense. Depreciation is limited so that you're not permitted to use either Section 179 or other bonus depreciation. Any form of entertainment or alcohol, fines and penalties. You have to be very careful with travel to make sure that the travel that you're providing is allowable. And then you have to look at, and this is a very common item, for self-rental. So that's a whole separate area that regulators will get into. But in the simplest terms possible, it's basically many of our closely held clients, our small business clients, engineering, architectural firms, they own a piece of property that they're renting the office space for, and they are renting it or owning it separately from the business for natural legal purposes and benefit. And as a result, they charge rent. And if you're charging rent that's in excess of actual cost of ownership, in the case of a self-rental, it may be limited when it comes to allocating back to overhead.
And to kind of go on to your second point there and shift a little bit, owner's compensation, right? So owner's compensation can be W-2, it can be draws, can be dividends, all different types of stuff. So, can you talk to us a little more about sort of that W-2 dividend draws fine line there of how you're allowed to do or not allowed to do distributions?
So in most cases, regulators are going to look at the overall compensation package. They're not going to simplify it into what they can see in the form of a W-2. They're going to drill down further and look at the amount of W-2 income, the amount of what the breakout of that is from regular pay versus bonus, and then they're going to look at deferred compensation plans, again applying limits, especially to ownership. And then lastly, if you are formed as a pass-through entity, in other words, like an LLC that might be an S Corp or a partnership, what are your draws, your distributions that you're taking as a result? And all of that goes into looking at compensation from the perspective of the oversight.
So to pose, I guess, a technical question possibly, and I apologize for putting you on the spot here, but if we take a cash balance plan as an example, right? I mean, that can't be funded indefinitely. I mean, that can't be funded with whatever number, the employer wants. I mean, because from a theoretical standpoint, you could open up a cash balance plan. You could contribute a whole bunch of money, of which some would go to the employees and then some would go to the employer. How would that appear to a DCAA regulator or a contract officer?
So again, as is the focus of the entire compensation discussion, because the cash balance plans are a form of compensation, you're going to be subjected to comp limits on retirement plans. And so while you can sink a lot of money into a cash plan, you're not able to use it necessarily as an allocable expense in preparing your overhead rate and determining your indirect cost amounts. So you're gonna start with a whole. You're going to subtract out the unallowable amount, and then it's going to get you to a dollar amount, which you're actually going to be eligible for reimbursement on.
Now, there's two separate, right, pieces to this, right? There's what's allowed, which is what's allowed per the contracting officer and the government, right? Then there's the unallowable, but is the unallowable tax deductible?
Well, assuming that the unallowable is a normally deductible expense, then absolutely. And it is an important distinction. It's certainly not a distinction without a difference, because it's meaningful to the business owner to be able to deduct something that might otherwise be taxed at a aggregate maybe 40% rate. And so you want to be careful that the expenses that you're making are appropriate and deductible under the Internal Revenue Code. And then that's sort of, for our purposes in most cases, that's column A. And then we look at those column A expenses and determine which of those are unallowable for purposes of DCAA in order to work to the column C, which is going to be what our net allowable is, and coming up with a percentage of indirect rate to be reimbursed. And it's an important process, and it's an important distinction that you make in understanding that while the expense may be unallowable, it's only unallowable on one playing field, and that perhaps the more important playing field, that being the IRS, it's still a deductible expense.
And that's, I guess, really important at the end of the day to have that distinction and really the backup and the documentation. Right?
Correct. And backup and documentation is sort of where the beginning and the end of the story as far as the oversight goes. It's critically important that employees as well as the employers maintain appropriate documentation. Lots of things are easy to forget about, but things that are critically important are things like travel logs, maintaining appropriate logs, timesheets, and being able to segregate your time spent on different projects, and being able to support those expenditures. And you can't just assume that whatever you did 2 years ago, you're going to remember it 2 years later when you're called into question. Your best bet is to concurrently manage those time records so that when you close a fiscal period, you can put it to bed and not worry about it, because you know that if you need to go back to it, you're going to open it and see the story exactly the way it was told at the time.
So timesheets are absolutely critical, right? Making sure that your employees are logging job costing essentially, right? But putting in their time per each job, and then management's approval, right? Before it's actually paid out.
And that's a really key piece there that you mentioned, Steve. Management approval in the whole process is the most important thing that you can manage, because if you simply have employees maintaining time records and signing off on them on their own, and there's nobody who's concurrently approving them, then they don't have much value. They don't hold water when they're subject to question, and that's so important. And it's just not something that you want to go back to again a year or two later. The timing of most internal overhead audits is usually 6 months to 9 months after year end, and so you're not doing it at the time. And the one thing you don't want to do is have your auditor come in and start to ask you questions, and then worry about, well, if he's asking these questions, well, what's the government going to say? Because we're not the enforcement agency, but we do have to enforce the rules. So what we try to do with our clients, and we're happy to do it with anybody that can help for you, is to have conversations in advance, to walk through client processes and do educational, basically, training on how best to maintain your records. And this works no matter the size of the organization. A lot of small business owners say, oh, it's too difficult, I don't have time. You have time. You have to make time, because at the end of the day, getting reimbursed for some of these contracts is your source of revenue. And it might be 70 or 80 or 90% of your revenue. And so you need to make sure that you've dotted the I's and crossed the T's, because you don't want to put that funding at risk.
So, GovCons and along those lines, right? GovCons can grow very, very quickly. I mean, it's a short life cycle for an 8A. And so having the mindset and the thought process to speak to, you as an expert to make sure that it's set up properly so that as you start to explode exponentially or win contracts or win awards, right, then essentially you are in compliance ahead of time. It seems like I think the threshold for audits, right, by DCAA potentially are actually going down in terms of their revenue amount. So there's more and more of them, I think, starting to get audited. So you guys assist as well in those audits or responses to those audits, correct?
We absolutely do, Steve. And one of the things that anybody who's in the DMV needs to be aware of is that with government travel budgets being slashed as much as they are, and with the volume of contractors in the Delaware, Maryland, Virginia area, we're low-hanging fruit. And so you want to make sure that you're doing it right so that you don't get caught. And I don't mean get caught that you're doing something illegal. I mean get caught that you're doing the right things, you're just not documenting them.
No, you could be doing everything right. You said it. You could be doing everything right, but if it's not documented, nobody knows, right? What is that that adage? If the tree falls in the forest and nobody's around to hear it, does it actually make a noise? Right?
That's exactly it. In my world, in the CPA world, we are subjected to peer review, which means that somebody comes in periodically and looks at all of our dirty laundry. They get to see our whole set of books. We open them up just like our clients do with us. And the one thing that has existed now for about 15 years, the one concept, is that if it wasn't documented, it didn't happen.
Yep.
And that's basically the government's approach. If it's not written, if it's not approved, you didn't do it. And so we want to put our clients in the best position possible so that they never say, where's the documentation? All you got to do is ask, they get a list, you prepare that list and you return it to them, and it contains all the approvals, all the supporting documents, everything that you need in order to make this process go as smooth as possible.
And then I guess after the 8A life cycle, right, you all also have the expertise to help with joint ventures, right, and making sure that's set up properly from a tax perspective, a DCA compliant perspective, right, a FAR perspective, and helping these GovCon clients continue the work that they're doing in some form, shape, or manner.
Absolutely. And you make an excellent point again that there is a life cycle to this and there is a process, and it's important to be prepared for what's next. Don't assume that your business is going to maintain itself the way it is. Be prepared to evolve with it. Let it grow.
It's funny how fast 8, 9, or 10 years can pass. When you're working in the GovCon and running your GovCon.
Absolutely.
Well, I think that you've provided some excellent value here. Talking about GovCons and the need for job costing, timekeeping, record keeping, and most importantly, I think is the perspective of speaking to an expert like yourself that can help you keep in compliance, which will in turn let you win more contracts, earn more money, and grow a bigger business, which can also help the economy and help employ people. So I think it's critical that if anybody needs to reach you or wants to reach you, I think they should give you a call, 410-356-5900. Scott, I really appreciate your time today and for helping educate our viewers. It's extremely important. And again, thank you for your time.
Steve, I thank you. I appreciate it. I'm glad to be a part of it. And I hope that everybody gets a little something out of this. And if there's anything that we can do to help, please don't hesitate. I know that similarly, if you've got payroll needs or bookkeeping needs, don't hesitate to reach out to SHS and reach out to Steve and his wonderful team.
Oh, greatly appreciate that. Be well.
Thank you, you too.